Morning, everyone. Morning. Going to start at past as per normal. I think there's a couple of new names came in here, so I'll just give a quick rundown how it works in the trading room. It's not a class, it's a forum. Just let these guys in. It's a forum where we discuss trade ideas, economic fundamentals, correct position sizing, that sort of thing. A Q&A, if you like, suggests to be made, and it's important to all interact. If you're not sure about something or go too quickly or you're not sure what I mean, just say, can you run that by me again, or question it, or you're not sure what the lines on the chart mean. I can obviously explain all that. Some of you might have been to classes, you need a bit of clarification on, no problem there at all. What I can't do is actual free training. That would take it away from the guys in the classes. That's their job. Stock Market College or whoever provide packages for learning. So you do need to know the basics when you come and join the trading room. In other words, what a lot size is, and the basic stuff. And then hopefully we can enhance the practical way forward. Okay, I hope that's all clear. Right. Although I host, everyone's got ideas, they've got opinions, some are experienced, some are less so. We all started at the beginning at some stage, don't forget. And yeah, so it's very important to interact and we can all hopefully learn from there. Yeah, so there it is. Say something. Oh, yeah. Okay, so you can hear me. Okay, I hope you can hear me all right. If you can't, please say so. I assume you can hear me okay. I'm going to share the screen now. Okay, you're good. Good. All right. Yeah, a couple of minutes to go, and then we get started. And then say, just keep a pen and paper handy in case you think of something and you want to ask it or do a reminder, or even the trading room is not on, after 11 o'clock or whatever. You might think, hang on, what about that? And you can put a note down, bring the trading room, and then you can ask. And if I can't answer it, or I don't answer it well enough, or you don't understand my answer, I'm sure one of the other guys will certainly assist you in that. We all try, like a family, pull together. It's ongoing as well, don't forget. You're not going to learn how to trade in one class or lesson or forum or whatever. Just a few seconds more and it gets started. Yeah. I know when starts, one's a bit shy. I don't want to make a fool of yourself by asking what you think is a silly question, but often those silly questions are important. And a lot of the other guys be glad to hear the answer because they're probably a little bit nervous themselves of calling it out. So, yeah, all good stuff. We Okay, past. Let's get started. Check out the euro dollar up here. My worry at the moment, because there's an idea might be a buy here, there's a good chance it might go up. But my worry at the moment is the weekly jobless claims comes out every Thursday at 2:30, could affect it. And remember, tomorrow we got the non-farm payrolls, where we're doing a straddle trade, so we're going to have tomorrow have a session between 2 and 3 o'clock. Don't forget that. Okay, so if you want to join, can do so. and that will obviously affect the dollar as well, which is a bit of a pity because I think there's a chance we might get a bit of a bounce here. So I'm just putting up there for you to chew on. It might be prudent to say give the dollar a bit of a miss at the moment, just in case something kicks you in the backside from the fundamental point of view coming up us to, and certainly tomorrow. But other than that, on a technical basis, I do see there's a possibility of some upside. So I'm going to move on from that. But if anybody there says I'm going to take the risk, I think there's a chance of a buy. Bearing in mind it's highly aggressive because of the reason I just gave. We'll come back and have a look at it. I'm just throwing that out there if you can have a look at if you like. We won't be sending anything out on this one, clearly, because it's a dollar, but I'm just discussing the trading room because people have a bit more experience and once they know the risk, then they can take that into account if they're prepared to take the trade. So you can look at it from that point of view. Okay, let's go through the negative to start with, which was gold. Gold, we had a trade out at about 1950, I think. Unfortunately, that got smacked by a much better than expected ADP jobs. Oh, excuse me. Jobs report yesterday came back and bit us. It was way over the expected, and that surprised everyone, I think. It doesn't mean to say we're getting a much better report tomorrow than expected. Often seen that the jobs report coming out on the Friday is very different to the ADP on the Wednesday. So don't just keep your mind open on tomorrow's jobs report release. But that was disappointing, came back and unfortunately, including myself, stopped me out. But hopefully your position size was correct. You didn't overexpose. So the feeling is I'm annoyed, but go on to the next one rather than devastated because you took a big smack. You must look after your equity management. And that's why I go on about it in the trade room, because I'll tell you right now, it's, by my opinion, outside the emotions is probably the biggest reason why people screw up, because they don't get their volumes right, like budgeting. I do go on about it, I know, but it's so important. Okay, that's why we have the position size calculator. There it is. It's on the screen there. And if you don't have it, go to the live chat and they'll load it down. Technical support, sorry, on the live chat, and they'll get it to your laptop. Remember, it's not for shares. Everything but shares. Shares is a Excel spreadsheet, a calculator, which you get on your learning management system if from Stock Market College and you log in. If you haven't got it, it's free of charge. Somebody there has it. They might download onto the live chat there. But having said that, this is for everything but shares. And there you can put in your position size calculator and you know what volumes are correct to take for the particular instrument you're going into. We don't want people saying, I'm traumatized because I took an enormous smack on that particular trade. Then you're overexposed. Okay, you need to get that right. However positive you feel about the trade, don't overexpose. Rather be disciplined on that matter. Very important. Okay, morning, everybody. Right,
yes,
so
Doctor, sorry to interrupt. Morning.
No, please do it. Morning, Mr. Murray.
Yes, sir. The thing is, what happened yesterday with that NDP announcement, it also had a huge effect on the USD CHF. So it was that and the gold. So you can even check it on the Euro USD. The dollar increased in strength tremendously, and it knocked a couple of my trades because of that.
Exactly. And don't forget, we had the CPI coming out in the Swiss today. Just a second, was I just copy and paste what we've been talking about there? Okay, the dollar index. I'll just do that while we're on the subject. We'll look at Tesla in a moment. Luckily, it doesn't open till 3:30. Remember, shares don't open till 3:30, so there's no rush on that one. We can certainly look at it. Like do the economic calendar as well. Put it up for you there. So very important you all have it. Some of you guys don't. Now you do have it. Very important. Okay, let's just let in. So yeah, going back to the economic calendar, upper state this morning, the Swiss had CPI came out minus 0.1. So it's slightly less inflationary than they expected. Because it's less inflationary, they looked at the economy as on getting back on terms. which actually surprisingly might sound bad, it actually weakened the Swiss franc. Not always, depending on the situation. A CPI ruling that is higher than expected looks inflationary, then there may be pressure on interest rate being increased, which will strengthen it. As it was better than expected, Swiss franc on top, it came off a bit, and that's what hurt. If we can stay in it, come back to gold in a minute. If we can stay in it, it hasn't hit the stop loss, I think it's going to come right. The dollar has strengthened. Unless something profound happens at Hoppers 2, and particularly tomorrow, I think there's a chance that the Swiss franc will recover and push it down. Economic fundamentals aside, okay. Running down so fast. Before we do Tesla, let's have a look at this first. Running down so fast. Let's see what you're talking about. Oh, I see what you mean. Yeah, in the last hour. Let's look at the dollar. Quick check on the dollar again on my other screen. No big movement on that. Just look at the fundamentals. Don't think any came out on that level. Certainly not the last hour. Just check again. China came up with some stuff, but that's not Japan. Don't know. Okay, don't know. Simple as that. How far did it come off? Let's get the facts right before we jump in. 52 pips in the last hour. In fact, the last half an hour. It's only been open that candle for half an hour. I don't know. All I can maybe suggest is, let's have a look at the dollar. This is purely guesswork, by the way, on my part. It seems to be popped above the resistance and maybe could be sustained. And so they thought the Japanese yen is getting over weak. Maybe they're worried about Japanese government intervention to strengthen it up a bit, or maybe a couple of institutions unloaded their positions, profit taking or something like that. I'm just throwing that out there. But there's no actual concrete knowledge I have other than that speculative comment I made. But yeah, I take your point, not quite sure. So as I say, it could be worry about Japanese government intervention, a lot of guys, bigger guys, hitting their TP, unloading their longs. And if big guys hit the TP, it's a sell order and it could have brought it down suddenly. Or massive profit taking or something in that line. But other than that, I can't see anything fundamental that's done it, especially not in the last half an hour. And remember, what's the time there in Japan? It's 9. It's in the evening, yeah. They're still running around. They're still open because they're ahead of us by about 7 hours. So yeah, they should still be open. Something like that, I would think, in Japan. I have a guess. But again, remember, it's a guess. Okay.
But you see, it only started when the Europe and England markets open.
That's also true. Well, they start opening around about 10 o'clock, actually, because they're an hour behind us. So they'll probably start to open around about 10. But
no. Currently, we're on the same time frame.
No, we're 2 hours GMT plus 2. They're GMT plus 1. UK anyway. Some of them in Europe, I give you, like Holland, I think France, Spain, definitely GMT plus 2, but the UK is GMT plus 1. But that being aside, I take your point, Fani, whether it's 9 or 10, that could be some of the Europeans opening up and unloading their dollar positions, something like that, because they're worried about the non-farms coming up tomorrow, the jobless coming up. They think maybe the dollar's overcooked, so they might be unwinding their dollar longs, which would obviously strengthen the yen as well. So those are possibilities that can be thrown in on it. But it is quite sharp, 50 pips. It's normally a fundamental that would do a 50 pip move in such a quick period of time. Okay, that's just thought thrown out there. Okay, yeah, the Swissy weakened a little bit because of the CPI, but I still think I'm backing it. There's no doubt about I'm backing it. I don't want to be selling the Swiss. Okay. Now, okay, what does it mean? The tide stop the GB? Yeah, GBCHF, GBP Talk about chicken and fat finger. That happened to me on the GBP CHF yesterday. I meant to put in 0.15. I put in 1.15. Anyone knows Forex size, position sizes, that was massive, overly exposed. I nearly panicked. I thought, take a deep breath. It's going slightly, Mike. Anna Maria know what I'm talking about here. I'm not talking about 0.2. I'm talking about 1.15 instead of 0.15. And I thought, well, I believe in the trade, seems to be going all right. I put a pretty tight stop in just in case. I'm prepared to take the hit. It came off. And I did nicely on it. The problem is I then got it hedged in better. I modified my stop slightly better than my entry. So I was covered. And I was up about four and a half grand up, which is not bad. You know what I mean? And then I thought, hang on a minute, I have to do something now. I had to shoot out, do something quickly. I could have taken the phone. Well, I think it's all excuses. I panicked a bit and I cut one of them, left the 0.15 driving. I'm now annoyed about it because I would have been up about 15,000 Rand today. So again, I chickened out. So even though I was covered, I chickened out. So we're all human. You know what I'm saying? But having said that, I'm still in it. I have modified the stop. I can't remember where, so I'll quickly check trade levels. Yeah, I've modified my stop to this level here, which is better than entry. I've got it 1186. It was about 30 pips away when I modified it. It's popped up a little bit, but I'm leaving it there. So it's about 20 odd pips away from mark at the moment, but I modified it was 30 pips away. So I'll leave it there. And if I do get knocked out, well, I've still taken a profit. I've modified, so just there you are. So you can modify, maybe modify it to 1190, something like that, 1.1190. So at least you're not going to lose on the trade. Okay. I'm going to knock those off again because I don't like looking at it all the time. That's why I have it hidden down there, because it affects the mind. I mentioned that many times, but newer guys just joining us now, try not to stare at the thing all day. You won't have any effect on it. The market will do what the market wants to do, but it will have effect on your mind. The ups and downs start to really grate at you. So there you are. Yeah, no, especially when money comes into it, Anna Marie. Yeah. And I'm a bit annoyed about that because I was covered, but I thought I'm up 4 grand. If it comes back, stops for me out. I made about 1,500. I thought, shall I bank a bit of it? So I did. But looking back, it would have been a bit show off to this morning if I had held on to it because it was down at 50 at one stage. I was about nearly 15K up. Anyway, there it is. I still did pretty nicely from that fat finger. Don't make a habit of it, by the way. I'm not encouraging that. Fear is a scream, bloody dog. Yeah, it's true. Anyway, I just thought I'd share that with you for your amusement. But it's a win-win situation. You laugh at my expense, I still made a buck out of it, so it's okay. Right.
Okay, can you just repeat, or can you just type down your stop loss for GBP CHF?
Okay, no problem. There you are.
Thank you.
Do I think the GBP interest rate affect trading? Well, absolutely on the pound anyway, and obviously the other side of the currency pair you're using, very much so. They expected 0.25%, but last time they did a half. Now, what's going to happen if they do a half again? Will that radically strengthen the pound? Not necessarily. It should in theory, but if you do it twice in a row, more than expected, there might be a rumble out there. The economy is far worse shape than expected. It might actually weaken it. So whether you want to do a straddle trade at 1 o'clock or not, you can do, but don't over. It's not like the CPI and the dollar. You know what I mean? So don't overexpose on it. Keep your position size handleable, but you can do one if you like. Okay. Good question. I don't know, actually. GBP AUD. What about that one? Let's have a look at the GBP AUD. Maybe GDP AUD or GDP NZD, something like that. I suppose you could even do it against the dollar. Not the Swiss franc. I think leave the Canadian, the Swiss franc alone. Okay. And certainly not the GBP ZAR. In fact, guys, rather leave the ZAR alone unless you really know what you're doing, and especially you've got small amounts of money. It is an exotic, and it attracts far higher costs, far higher margins, and a lot of unknowns come into it on the fundamental side, what's happening, etc. So, and the volatility, it's extremely volatile currency. I think it's a bit hot for the bloods unless you're very experienced. Okay, I think try that, or the NZD. Can't make a mind up, so I'm chucking it back in your hands. One of those two. So I'm leaving. I'll put Tesla down because it's not open till up as 3, so we'll come around to it. We'll do these ones at the moment first. Okay. NZD, haven't missed anybody? I hope I haven't. Just make sure I haven't missed anybody there. Sometimes I miss on the chat line. Don't think so. Okay, so we can look at the NZD-JPY. It's very much so, and it's very much linked to China. They've got a free trade agreement with China, and that's their very big brother. So if China is slightly affected economically, it will affect Australia. NZDJPY. Make sure any new guys don't get too bewildered. Interact, you'll soon come to the party. I promise you, this is not rocket science. What makes it difficult is your head, the emotional aspect, and incorrect position size, incorrect volumes. Okay, you'll soon pick it up as long as you interact. Okay, NZDJPY. And the trade's having too badly. All right, we got smacked on the gold, but I think gold could go back up from here. But be a little bit careful with the fundamentals again coming out. But we've got to still trade. We can't just stop because every day they've got some fundamental. We'll just give up then. So we've got to take that into account. And one way of doing it is getting that volume correct. NZDJPY. What do you want to do with it, Dante? You just put that down. Do you want to sell it or buy it? It looks like it's come right down to support at the moment. I think there could be some Japanese strength around the corner coming in. The New Zealand dollar at the moment is New Zealand is what's called a risk currency. In other words, it can be incredibly strong. And COVID, they want the few to come out of it, the first to come out of it, and it really ruled the waves at one stage. Now it's slightly on the weaker side. The problem is Japanese yen at the moment is fairly weak as well. They have to be extremely dovish on their interest rate, about 0.1%, 1/10 of 1% interest rates. It's basically free money, but their debt is so high. I think I mentioned it before, I'll repeat it again. It's so high, they're rather worried about increasing interest rates and using other methods to try and get themselves out of that debt or reduce it at least. So as a result, that's one of the reasons why the Japanese yen is a little bit on the weak side. But I think it's a little bit, I'd say I've been saying this for about a month and nothing's been happening on it, but just be a little bit wary of it. So I think you're in a position on this, Dante. I'm not sure you're short or long. To me, at the moment, I'm going, it's very difficult to call. Technically speaking, it's come down to support. It's just dropped below the 50-day moving average. And it could get a bounce from here, but the problem has some technical damage been done because it's below that line there. Let's try the 4-hour. See, in the 4-hour, it's more help for you to see that. It's in the sell zone on the 4-hour, and there's a bit of support there or resistance if you're going short. As you see, some TPs were triggered, which means we've got a bit of short covering bounce there. Remember, a TP on a short is a buy order, not a sell order. And when you have a lot of guys exiting a trade, that's buying to exit, you can push the price up if you get enough volumes. Hope that will make sense to you. So it might get a bounce, but I think we could get some sort of downside on this. If this actually opens tomorrow below this line, I'll be looking to short it, to be honest. So I can't remember if you're long or short on that, Dante, but if you're short, I think I'm in favor. If you're long, make sure you get a stop loss in, be careful. And for goodness sake, guys, get your volumes correct. Do not overexpose. It's quite common. Okay, you're on a buy. Okay. Well, all I can say, fingers crossed then, and hope you got a stop loss to protect you, and not overexposed, like I said. But I'm leaning towards a downside, but you might get a bit of a bounce back up to the 50-day before the sellers come in. My worry, the opening here. Remember, on a red candle or a bearish candle, the opening's at the top of the body and the close at the bottom of the body. This is still a work in progress. It opened just below the 50-day moving average. So I'm not talking about a trade idea here, guys. I'm just giving my thoughts on it, and I think it's inclined to more downside. I'm sorry to give you that, Dante, but I'm inclined. But I could be wrong. In this case, I hope I am.
Yes, Roger. But yesterday we went in for a long the trading room.
That's correct. And it did okay, and then it came off. That's correct. It did okay, and then it came off. That's my problem.
But I'm still in it, and I think Chantal as well, and there may be a couple of others as well.
Yeah, I'm getting a bit worried about it now. Let's have a load it there. 87. It got up yesterday to 88.15. So it did very well yesterday after that. So obviously about nearly 100 pips, in fact, over 100 pips in profit. I think most people, including myself, might have modified their stop loss and been stopped out that pullback. I think the technical damage has been done there. If you're still in, well, you got your protective stop loss, but it's an 86 a long way away. But again, it's 135 random micros your risk. Hope you took it correctly. But obviously I'm hoping for you guys it's going to be okay. But as I say, that's why it's so important to modify the stop loss, because situation can change. and there has been some technical damage. But it's not a trade I'd assured it was still open, and I get that. But unfortunately, I'm leaning slightly to the downside on it. Hope that all makes sense. Sorry about that. That's why I see it. Did anybody modify the stop? A lot of people should have been stopped out and profit on that one.
No, I wasn't in front of my computer, so I missed it.
Pity. Anybody out there? You modified, Loazi. Okay. Well, you just join us now, Dante. You'll get the hang of this. Yeah. Loazi, were you stopped out in the end? You should have made some money on that one. I know a lot of people did do that. Okay. Just remember, you don't have to look at it all the time. Keep your phone handy. Check it. Even in a supermarket. As long as you've got some data on it. I've got a little router I take around, put in my back pocket. I just occasionally check it if you're out and about. But yeah, because it's up 115 pips at one stage, as you can see. So maybe, anyway, a lot of people did modify and out of that one. Okay. Well, I hope I'm wrong. Hope it comes right in the end. We're still in it. I get that. But to say, I'm a little bit nervous. We'll see how it goes. Anyway. Any questions on that? Any queries on that? All right, we'll move on then. CAD JPY, that was doing all right. I modified my stop and I got stopped out on that one, albeit in a profit. It's come off for quite a bit now. I got stopped out 107.40. It's 107.60 or something, 70, I think it was when I modified. I went to 107.40 and I got stopped out in a profit. Okay, anybody else got stopped out in a profit after modifying, or you guys still in this one?
Still in.
Still in. Okay. Fingers crossed. There could be some more upside on this one. Remember that oil's come off a bit because of the strength of the dollar. So as a result of it might have a little bit of effect on Canada. And clearly that's occurred. It's come off a bit. It's holding at the moment on the 10-day moving average. That might hold. It's still in the buy zone. So clearly we could get 107 holding, hopefully, and then move back up again. Well done, Michael. Well done. So I hope that'll come right because it's up quite nicely earlier on. Okay, just try and remember that, guys. You don't turn a winner into a loser. Okay, if that holds, actually, guys like who Mike might look to go in again, as a matter of fact. Just keep an eye on that. If this holds, let's look at the shorter term chart. On the 1 hour, the work for all of them is moving averages. Remember, that's the 10-day simple, the 50-day simple, the blue one. The black is the 100-day simple, and the brown one's a 200-day simple, multiplied by the times. It's a 200-hour, 200-week, 200-day, or 200 times 50 minutes or whatever, depending which charts you're on. So put them all on there, right-click, and then go to templates and save your template. Put your name in there, and then save it. So you've got them all handy to if you lose your charts. I think there could be a possibility. It might be a hold here, a bounce upwards. So keep your fingers crossed on that one. I'm going to wait on, but I might go in again, but I'm going to hold 5 on that one for the moment. But yeah. Okay. So let's move on. The next one was gold, NZD, JPY, anything else we're still looking at. Brent, I think most guys are stopped out in Brent in the profit. It went up to about 75.50 or something, came back on the strength of the dollar and triggered most people's modified stop. Okay, so there we are. Right, I think we've covered most of them now. Just get this out of the way. Let's see what can happen there. I don't have any other trade ideas, otherwise they would be posted. Oh, Tesla, that's right. Let's go back to Tesla. Difficult call because it looks like the Americans are doing quite well at the moment, and the Nasdaq, although a bit overcooked, so is the Dow on the high side. It seems to be maintaining that high because the jobs are looking pretty good despite the continual increase of interest rates the last couple of years or so. Well, last year or so, anyway, whatever. So yeah. Being that as it may, I've mentioned many times, I like the company. I think everyone, if they had a long-term portfolio of equities, it should be definitely in there, like Apple. Do I think it could be a bounce from here? To be honest, yes, I do. What is the NAS doing at the moment? Let's have a check. It's come back to support. We could get a bounce on the NAS. It's clearly still in the buy zone. we could get a bounce on the NAS. I'm a little bit wary of the NAS at the moment, especially with fundamentals coming out today and mainly tomorrow. It could play a bit of a game in it. So I'd be a little bit wary of the NAS at the moment. But after non-farms, we hopefully will get a clearer picture of the way going forward on it. But that being as it may, I think Tesla, technically speaking, certainly, and I like the company, it's a good chance of some upside. Do you agree with that? It's your idea, Gerard? Thank you. It is doing good, Chantel. Yeah, thank you for that. Do you agree with that, Gerard? Do you see some upside on that one? Very much, yeah. Okay. So on the same page on that one. So I think the thing is, the beauty is the non-farms at 2:30, the American markets open at 3:30. So that'll be out the way before that occurs. So you'll know what prices on opening because the non-farms will be taken into account. So yeah. So we won't be taking a trade idea out. That's tomorrow. Sorry, Thursday today. Sorry, getting carried away. At least the jobless claims will be out today. So you can get an idea tomorrow. But just remember the non-farms could screw this system up tomorrow. But yeah, I do see some upside. Okay. Any questions on that? Fani and Anna-Marie, anybody? Any questions on this one? Do you think it's a good idea to go for it, 3:30? Stop down, I'll just stop down there. $15 stop down there, below the highs back in June, below the lows, sorry, back in June. $15 stop, take it up here. Plenty of upside. Don't have to take it that far. You can take it to here. Yeah, I can take it to there if you like. Not too keen. I would totally agree with this. I'm only hesitant because these fundamentals could screw it up. But otherwise, I like the trade very much. Do you want to short it? Well, I would only short if it breaks that support level there and preferably the 50-day moving average as well. But again, either could happen for the fundamental point. But I certainly wouldn't be shorting it technically, no. Anybody see a short here with Boani there?
No, I think I tend to wait because after the announcement of the degradation or degrading, the whole market, the way I analyze it, is jittery. So there's no direction at this point in time. Everybody's waiting for tomorrow, I think.
Yeah, totally agree with that. I'd agree with Michael as well. Michael McLean, that is. Long on wait, yeah. The 10-day moving average, look, this is volatile. I agree. Tesla is particularly volatile, but normally the 10-day, I don't take that much. I do a little bit, but not a lot of account on shares normally because they're what's called swing trading. They tend to often be a little bit slower, and the leverage is less as well. It's a 5% margin, only 20-to-1 leverage. So I don't take that into account as much as I would on maybe the NAS or the currencies. But and the more important than the 10 is the 50 and the 200, and it's clearly bounced off on the point of that 50. That's why I suggest you all have it, see how they work very powerfully. And instead of cluttering it up with all lagging indicators, this is a very powerful one to assist you. You could do that. Well, no, I would say it's a smaller stop loss. Get the stop loss in the right place, just reduce your volume. Still do the, what was it, $14, $15 stop or whatever it was, and just reduce the volume. I wouldn't play too cute and get too tired of stop. You're getting highly annoyed if you put a $5 stop in, you're stopped out and it goes on to hit target. So stick with the stop below the June lows there and then aim for whatever. And then maybe the high back at 281.70 area around about there, or 282. But just rather reduce your volumes. That's my opinion. Okay. Okay. Now's we can. Now's leave it alone for the moment. Technically speaking, I expect a bit of a bounce here, to be honest, but that's nothing to do with any fundamental. I'm just purely technicals. I think we could get a bit of a bounce here. Clear it's a strong zone. A lot of economic stuff coming out of the States is fairly positive. Looks like they're going to avoid recession at the moment, the way it's going at the moment. Yeah, I technically speaking, I see a bounce, but I'd be very wary of it at the moment. Oh, yes, Disney, we certainly can. ABCDE, get missing. Now, working out quite well. Thank you, Mr. Murray. Don't thank me on that, guys. You can thank a certain Munir Murray. So that was his. He drew my attention to it. I liked it, and eventually sent it out. Thank you very much. It's doing very nicely. Okay, I presume you can't modify stops now, and I'll be honest, I've forgotten. I'm doing nicely at it, but I've forgotten. I'll try and remember to do it when it opens 3:30. Remember, you can't modify, do anything with the markets closed. And you guys, you cannot do anything. If you get a trade idea coming out to buy or sell a particular US share, remember, there's nothing you could do about it until opening. So just check the opening price before you dive into it. Okay. Yeah, it's doing well. When it opens, see what the price is and keep a bit of a distance. It's I think it's a couple of dollars in profit, isn't it? Have a look at my trades, have a look at it at the moment. See it. Just click it there. Okay, it's a couple of dollars in profit. See, my CAD JPY was not knocked out, but isn't a profit, is all right. That's doing very well. Unfortunately, I closed the other one. What a pity. I mean, really big. Anyway, I did. You see, it's come to standstill now because it's closed. 80, I forgot to modify my stop. It's still there. I must remember to do it. So I tell you guys to do it, and other stuff comes up. Like, you know, it happens to everybody, and I forgot that. Never mind. 86.30, depending. I think you probably make it around 88. You're in profit 88. I think you already did that, Nikki, as on request yesterday. I advise you to do it. I forgot to do it myself, eh? Typical. So yeah, 88, probably a stop loss I'll look at depending on opening. Okay. Happy with that. To answer your question. Okay. Often happens. I recommend a trade, everyone goes into it, and I miss the bloody thing. And by the time I remember to put myself in, the bloody ship sailed. Just while we're on that subject, newer guys here, won't take too long. I hope everyone knows how to cut a position, but I'm assuming a few people don't, so I'm going to show you what to do. Right, when you want to modify the stop loss, you clearly click on the stop loss, right? And you can modify the TP or stop loss there. Easy, easy, easy. But you might want to cut your position. For instance, you've got 0.12 in this case. You might want to bank, let's say, that's 12 micros. 0.01 is a micro, 0.1 a mini, 1.0 is a standard lot. To make life easier, 0.0, you know, just say micros. So that is 12 micros. You might want to bank, let's say, 5 or 6. Let's say half of it. If you want to bank 6 and let the other 6 run, you don't have to close the entire trade. You can close part of it, partially close it. So it says, let's highlight it and double click. Okay, I'm not going to do it now. I'm just going to show you how to do it. I'm not going to do it. I'm just hold on to it. And then you change your volume to the amount you want to bank. In this case, let's pretend I want to bank 6 micros. I put in 0.06, then I click on the close there. What will happen is obviously that loss in this case will be reduced and the volume be reduced. Have you all got that? It's quite important. I'm sorry to hold everyone up who knows it. Because anybody out there not sure of this and want me to do it again? It's not complicated, but it's important to understand it.
I just wanted to ask for capping your size. So, for example, on shares like Disney or like Tesla, after the NFPs, then would you recommend capping the size around just before 3:30 on Friday tomorrow?
What do you mean by capping the size? I'm not quite sure
No,
what you mean by it.
halving or reducing the.
You can't. You can't. The market's closed.
Obviously because the market's closed. Oh, okay.
Okay, so you can only do it after non-farms when it opens. There's nothing you can do. I'll show what I mean. I'm going to reduce the volume now on my Disney, right? Double click.
Right.
And I'm going to bank 20. Look what happens. Get it?
Oh, okay. Okay.
Okay, so now you know.
So then would you recommend doing it before
Well, you can't do anything till up as 3. You can't do anything till 3:30. Once it opens, you see what the opening price is. Remember, there's got to be buyers and sellers. The shop's got to be open. You know what I mean? It's 6 in the morning. I feel like going to Pick and Pay and buying something. Well, I can't. The shop's closed. Same principle. So you can check it out where it is. If the Dow comes off further today, and that was the non-farms tomorrow, remember, and the US jobless claims is you know, negative for the Dow, you might find Disney opens lower still, and then you can maybe modify again. Okay, I assume you modified yesterday. Did you do that?
Yeah, it was on, I think it was on 87 or something. My modified stop loss was on 87, the last one.
Oh, it's a bit close. It's very close. It's
Okay, I'm moving.
86.30. We can't do much about it now. You might get stopped
Yeah.
out in opening, you might not. But 87's a bit close. 88 would have been a better one. But never mind, it's in now. We'll see what happens. And if it goes wrong, well, you make more money. If it's stopped at 88, clearly, but you need to get a bit of a gap, don't forget. Okay, right. You can close past your losing share, but you stick to the strategy, but you can do. GBP CHF is coming off again. I'm tempted to move it down again. From 1190, 50. I'm going to 1180. So you all got that. You might want to do that to follow it down. I'm going to do that as well. So I'm going to modify it to 1.1180. So reasonable gap of 30 pips. So in fact, slightly more than 30 pips. So I'm happy with that. That's what I did again with the CAD JPY. I got it to 107.40 because 107.70 at the time. In the end, stopped me out. It looks like just as bloody well because it came off even further. Okay, so there it is. Okay, so I hope you've all got that. You all know how to partially close. I hope you do anyway, because I've just shown you. If you don't, you didn't ask. If you don't know, you didn't, and I showed you, and you still don't know and you didn't ask, well, I can only help you if you ask, okay? Well, that's the whole idea, Chantel. The non-farms hopefully will give us guide to the month. That's very important. They'll give us some guide, so that's correct. That's why normally we don't, not always, depend on the situation, normally get many trade ideas out on the Friday because of that reason. And virtually you won't get a gold or a NASDAQ or a dollar trade out. That's for bloody sure. Okay. Remember, it's so important that the world's up for it. So don't care if it's 2 o'clock in the morning in your country, traders will be up for it. The sell alarms to be up for it. So a little tip here. Don't call your broker 5 minutes before 2:30 on non-farm payroll day. He probably won't answer. Or another one, if you call your broker and you ask him advice and he says he's not on the road, he's going to be in front of his computer in half an hour, and it's 5 minutes before non-farm payrolls, I'd be a little bit suspicious of that broker. What's he doing on the road? You get my point. Right. Okay, so Disney sorted out. Any questions, something we discussed? Anyone just go over again? I went a bit fast or just need a bit of clarification? Just make sure you got all those moving averages on there and saved. I showed you about, I didn't, but I'm about to show you now. You want to look at some properties of the instrument, highlight the one you want to look at, left click, right click on it, and it gives you the properties there. The spread is 3.5, 3.5 pips or 35 points. That's the contract size. That's why all size doesn't fit. All size doesn't fit. I can't think of the right word. Not one size fits all. That's right. Not one size fits all because a different contract size. So you do a share, like I got 40. You wouldn't put that on the foreign currency unless you have about 100 million in your account or something stupid. It gives the margin, everything there if you want. Okay, there's your information. You might be to go back in again. Yeah, that hit real hot, the stop loss. That was fundamentals. I think there's a good chance it might go up again, but I think probably just leave it alone. You're probably still smart in getting stopped out. And as I say, jobless claims, non-farms tomorrow. It will affect gold, positive or negative. Obviously, I don't know. I think it might be prudent just to stay aside and lick your wounds, basically. Sorry to hear that, but yeah. But we all did, including myself. I took a bit of a smack, but that's happens. Well, you see, the spread opens and closes slightly depending on volatility, liquidity. It usually closes slightly. The more people trading, the less people trading. It opens a bit. You get something like in all over the world. But I'm going to talk about JSE. You get something called penny shares. What's a penny share? That's a lower price share, not always, but often, and not a very big company. It's not a top 40 company. Very, very thin trading. Sometimes it can go days, sometimes a week without any volumes traded, and they'll often have a wide spread. But then you get something like, I don't know, Naspers or Sasol or something that's traded very actively by institutions. Because of active trading, they will narrow the spreads. The spread is based on the costs. It's just economy of scale. If you've got a tiny account, you tend to have higher costs than a very large account. Simple as that. Because, you can give a discount to a big buyer, but you're not going to a small buyer. It's just simply economy of scale. That's why it floats around depending on the of the liquidity or the what volume of the volumes traded, basically. Hope that makes sense.
With that in mind, I just wanted to check if I'm right. So is that the reason why, like, when you enter big Forex pairs, you obviously start off on a minus because the spread is so big? And then
Yeah,
when you enter,
quite correct.
Okay. Okay.
Well, it's
And then
not well, yeah, well, not hang on, let's get that right. It's not something so big. You're going to go in anywhere unless you've got no spread whatsoever. That won't occur unless market movements push into red. But yes, just about all have a spread of some sort. How are they going to make their money? The broker, So they will always all have a spread depending on the side of the spread. Now we got let's take. And euro dollar is probably the cheapest because it's the most highly traded instrument in the world. Let's take the GBP CAD. Okay, that would be called a cross. It's not a major. An exotic tracks a higher spread. A cross is slightly higher, and the major slightly less. With the euro dollar being the highest volume traded, we'll have the tightest. Call them tight spread, the tightest spread. You can see it's 73 and 78. Ignore the last decimal point. That's a point. We do after pips, right? That's quite a wide spread. 5 pips. You go and look at some brokers internationally, America or whatever, like the bigger ones, they'll probably have tighter spreads because they've got the book value to be able to give a better spread. I mean, you go along and you say to a broker, I would like to come along to you, but I like your spreads. I want a tighter one. They might negotiate a tighter one for you, but they'll say, but on one condition, what money we talk about you putting in there? And if you say about $1,000 or something, I mean, I don't be rude, they'll laugh at you. But if you can say, I'm going to put in $100,000 or more, then they'll look at maybe giving you a slightly tighter spread because it's worth their while. And only if you trade on that, if that makes sense. So it's just economy of scale. And that's the thing. I mean, a lot of countries like ourselves, the balances in comparison to Europe and America are quite frankly minuscule. So they have to have wider spreads or they go out of business. Simple as that. Hope that makes sense.
And then with like shares, for example, I saw like when I entered Disney, it entered at like a blue, it wasn't red. So is that because it has obviously the floating spread and it's smaller?
No, because it moved at that point. When you go in, there was hardly any movement. As you see, the spread's extremely tight because there's commission involved. But if it hadn't moved, you go in right now, example, and you can go in, the market's open, it's not moving, you'd see a 1 cent per share loss. So if you, let's say, went for 10 shares in Disney, you'd be 10 American cents down immediately until, if you're going long, that is, so you're going short in this case, okay, until that 30 becomes 29 and the red will go, you see a nil, and that goes down to 28, and you see a blue. Does that make sense?
Okay. I think so. It's just because it's a tighter. It's just because it's commission.
It's a very tight spread, yeah. There's a commission, not much of it. I'll give you it's small, but it's there. Now, if you go to CHF JPY, because it's an exotic again, because I know the Swiss is a major, but hang on, Japanese, even though that's a major, but it's called a cross. Okay, sorry, it's the US dollar's got to be involved to give it a major. Slightly wider spreads, 91 to 97.6 pips. So if you get in, let's say 0.1 or 10 micros, 1 mini, 10 micros, that's $1 a pip movement. So immediately you go in and let's say a buy or a sell, you'd be $6 down until let's say you went in short, right? That would have to come down to your entry price to break even. Okay. Hope everyone understood that.
Yes, thank you.
Good.
Thank you for the refresher.
Okay, that's fine. That's why it's like everything else. It comes down to, they hate to admit it or something. It comes down to money. I mean, a lot of people don't like to talk about money, but what somebody said a lot about the upper class is they never talk about money, but they think of nothing else. Well, it comes down to money somewhere along the line, and it's money, If you want better costs, unfortunately, you've got to make it worth the while.
Roger?
Yep.
I know you spoke about it a bit earlier about the buy and the sell. If you buy this and then you sell that, and I'm actually not quite clear about that.
Okay, that's called the spread. It's sometimes buy or ask. You see that word ask? Same thing, or
Yes.
sell or bid. I will use
Yes.
buy and sell. We're all familiar with it. Right. If you buy, let's say this stops right at one, call that 98 and 04. It's jumping around. Call it 98 and 04. If you buy at that moment, 0.1, not 0.01, but 0.1 to make my life easier, 10 micros or 1 milli. That is $1 a pip spread. So what I'm saying is, let's say the spread is 5 pips. You buy at that price, you're going to be minus $5 or whatever that in rand immediately, because you bought at that, but you exit at that price. So if you bought at 163 and the sell price is 162.95, that 162.95 has got to get to 163 to break even. That's why when you enter, you always see a minus sign. Says Nikki, but when I entered that one, it means you went blue, because as you entered, a suddenly jump in the price. So it went from 163 on entry, then the bid jumped up to 106, 163.02, and that's why I didn't see a red or blue. It doesn't happen very often, but that could occur. But so that is the market maker spread. You buy at that and then sell at that. If you're going short, you sell at that price, you exit at that. So you're going to be the differential pips down on entering until the other side comes to the same price and you break even, and that drops below that price, you're now in a profit.
Okay.
Are we
thank
clear?
you.
All
Yes.
right.
Are we-
that makes sense.
Are we all clear on that?
Yes, thank you.
Okay. Okay, good. Hope we all learned something there. Very important. Good. I hope everyone understands. Can't spend all day on it again because we discussed before. It's all in your LMS and you can interact in the classes. Everybody must know what leverage is, because I'm absolutely convinced at least half the people trading don't understand they're in highly speculative, leveraged instruments, financial instruments. And that leverage is extremely fast, and it can and extremely beneficial if it works for you. But unfortunately, as it's fast, if you hit something, it's not very good. So you've got to understand the leverage and the implications, the pros and cons of it. Okay. So if you're not sure, interact with your class. I've gone through a bit in here, and maybe quite time to go over it again. But we've got to look at trades as well if we got them. Because we don't want to hold up all the experienced guys to go over the same stuff again because they couldn't basically open up the LMS which they bought. But please write down leverage, ask your class or look it up. It's very important you understand you're in leveraged instruments or derivatives, same thing. You've got to understand the implications of it. Morning, Solly. Yeah, I've heard of it, but I've never used it. To be quite honestly, I've never used it. Never ever used it. Have you? Had you any success with it? There's plenty of indicators, about 40, 50 of them. I wear most at one stage, a lot of them, because I don't use them much. It's sort of sunk to the back of my mind a bit. Yeah, there's a heck of a lot of them, but they're all lagging. Tell you right now. I'd rather look to see where the support is to bounce. I can see the floor. Everyone can see the floor. Nice and simple. Bounce off that. But if you've used them and had some success, carry on. Okay, probably by people who've used it and they've been happy. But like everything else, you can read positive feedback on Bollinger Bands, on stochastics, Williams percentage, consolidated channel indicators, the hordes of them. Depends. I get guys will promise you the 9-day exponential cross the 21-day simple moving average works for them. They love it. Well, fine. Somebody else might say just the opposite. I don't know. All I can say, these are useful, but the 50, which is the blue one, and the 200 simple are by far the most used moving average in the world. And so they can be self-fulfilling. That's why I strongly advise you having them. And anyone who's been in the trading for a while will see the benefit of them. And have probably made life trading, technically trading, a hell of a lot easier, and be able to read very, very quickly a potential trading possibility, much quicker than faffing around with hordes of, RSIs and that sort of thing.
Roger,
go on.
I did a straddle yesterday afternoon with a oil stuff coming out,
Okay.
and I did a straddle on WTI.
Yeah.
I put in my buy
Yeah.
and in my buy stop,
Yeah.
and then when I wanted to put in a sell stop, it wouldn't turn red so that I can click on it and place it. I tried it. I did it about 3 times, but it just wouldn't let me do a sell stop.
But you got me on that one.
Yeah, it was very funny. Luckily for me, it did go to a buy very fast, and I only made 19 Rand. But I was really surprised
works.
about the thing that I couldn't put the sell stop.
I don't know. I've no idea. I've never, ever had problems in that my entire trading career. That's the first person ever to come up with that. I'm not quite sure where that is. I don't know. If you can put your buy stop in, sell stop, the only thing I can imagine, maybe you clicked the wrong button or something, or I don't know. I have no idea.
No, I really.
Or maybe the sell stop was too close for the spread. That's a good point, Gerard.
That could have been, yes.
Yeah.
Yeah,
that could
I
point.
thought so.
Yeah, you can't put a sell stop within. Let's say the NAS is a wide spread because that's about 14 pips. So if you put a sell stop 10 pips below, it's within the spread, and then you can't do it. That's
Yeah,
also true.
that
Yeah,
might
good point,
be because
Farah.
I did go 10 below. Yeah,
Yeah, you
but
might
then
not. Yeah,
I was so close to the 430 thing or whatever at the time, that I actually just closed the buy stop as well and did a 1-click buy. And that's
Okay.
how I just made a small
Profit.
Mhm.
Well done. Okay, what can I say? Well done. Okay, yeah. On that subject, don't forget, guys, only those with funded accounts, remember, not with 200 Rand. I mean, a funded account. If you want to join me in the trading room, Zoom ID is the same as this one at 2 o'clock on Friday. Once a month, we have the non-farm payrolls session, 2 o'clock till 3 o'clock. The data release is 2:30, and we're doing what's called a straddle trade. We put, as Anna Marie just mentioned, a buy stop in, a sell stop in. So if it comes out, the data comes out way different than expected, often you get a big jump in the markets. If it's a bump to the north, obviously your buy stop will kick in, and you'll obviously close your sell stop and run with it. You can make often the experience we've had, and that's why you often hear them talk about it, because they've had success and they like it. Well, obviously going to like it because it's successful more times than not 100%, but more times than not. And the sell stop if it goes down. We don't predict which way do you think it's going to go. I have no idea and what's going to happen till it's released. And I'd rather, even if I think I might, I don't want to bias people's opinions. I'd just rather put the buy and the sell in. And if it clicks one in, you delete the other one and away you go. And it had quite a remarkable degree of success. We usually get a full house of 100 people. So to reserve your seat, basically, try to be there on time. If you're a little bit late, I'm sorry about that, but some guys caught up with traffic and they already know how to do it. They don't need to know the mechanics of how to do it. It is unfortunate. They can do it on their own back anyway. Newer guys, if you don't understand the mechanics of the trade, I can explain it now if you've got a quiet moment and no other trade ideas. We'll do a Q&A if you like. But it's important they arrive on time so that they have time to learn how to place the trade properly. It's no good arriving about just after 20 past and say, show me how, because people by 25 past are placing the trades and we haven't really got time to explain it to them. So give yourself time to understand how to place. It's not very complicated, but you still need to understand it, and then make sure that you got the trade in. As I say, you ask Anna Marie, you ask Fani, you ask Martin, you ask Mike McLean, anybody there who's done it before. We've had Gerard far more, I think about an 80% hit rate on it, maybe slightly higher. I don't know what you guys think. Extremely high hit rate. And it's a nice way to go into your Friday for the weekend with a nice quick buck. The following week, if you miss it or you get the idea, a bit nervous to try it, see how it works, the following Thursday, which is what, the 14th, I forget the date now anyway, not this week, but next Thursday, we'll have the CPI 2-3, same principles as NFP, and we can do the same thing. And then when you like it, you get a taste for it. You can do it on the euro, dollar, the pound, you get it. Just make sure you've checked there's going to be enough volumes on it. movement to do it, because otherwise you might end up with a damp squib. Nothing happens. Okay, but we'll see. I think we asked yesterday, Martin, and you can do what you like. The guys have done it before. Choose any, well, on a dollar later or whatever, can take what they like. But there seem to be more in favor of the dollar yen rather than the euro dollar. So tomorrow I'm going to do the dollar yen with the classes. But if you prefer the euro dollar, do it. I'm just going to show the newer guys the dollar yen, so I'm going to use that one. Well, it's nice to, well, yes, well, that's exactly it, Anna Marie. It's nice to have the moral support with other people and the excitement of it. I mean, you know, I don't care if you're an expert trader or not, you probably still come to the trading room because not you learn a few new ideas. It's like a family, you share your fellow traders. Remember, full-time traders, quite a lonely life in front of the computer. It's nice to, most of them have a forum of some sort to interact with, you know, and it helps, you know. And sometimes you see something, I miss it, and vice versa. Okay, I missed that damn Swiss franc. What happened? Oh God, it came up last night. I forgot about that. You get the idea. So we pool ideas, and that's why it's important for you all to get up to speed as soon as quickly, and then we can all understand what's going on and add valued comment on it, as happens. And the quicker you interact, the quicker you can pick it up and get over the fact it's extremely complicated. The motions are, yeah, the head is, but the mechanics are not. Unfortunately, I forgot to put a stop loss in a trade. How did I get in? Now I'm in trouble. Right. Which one is this, Sam? If it's a share, you can't. Which one is this one? Just type it out. You should all know how to operate the platform by knowing how to modify and place a stop loss after you've entered the trade. Often I jump in when it's moving quickly. Once I worked out the volume, get into the trade, put my SL and TP in afterwards. So I'm not faffing around as the market's moving. GBP/AUD, let's bring it up for you. Okay, where do you want to put your stop? Yeah, modify the order base, yeah. Just go to the modify your order. Go, it says stop loss there, double click on it and put in your stop loss and TP. Simple as that. Yeah, it's starting to come off a bit, Swiss franc. What a pleasure. Hope you got that. Got to know how to operate the platform, guys. Don't have to be a detailed fundy on it, but modify, close, partially close, open new position, and that sort of thing. Very important. Hope you got that. Put it, just double click on the SL and put in the stop that you want to put in, basically. And also, when you ask a question, it's always important to put the instrument with your buy, sold, even that sort of thing, because then I can give you the correct information because I've got the correct data. I often get WhatsApp. Should I close my position? Well, what position, you know? Okay, I hope we're good on that. Okay, hope we're good on that one, Sam. Good stuff. Okay, well, let's have a look. A bit of a catch up. Yeah, good. Start to come to the party. Hopefully you might get a bounce there, so you should be okay. But don't forget, if you get about 30, 40 pips in profit, modify your SL. You risk getting stopped out and hits target. I get that, but at least you're protecting yourself. Let's go back to our friend, the NZDJPY, see if we're getting a bit of a bounce, and hope I'm wrong on this one. Very much hope I'm wrong. Yeah, we're getting a bit of bounce. Thank goodness for that. See, on the daily, I was getting a bit nervous. I think there could be some downside. Unfortunately, I still think that, but it might get a bit of bounce up and rescue some of you. Let's hope it does. Be careful when it gets in the profit to be holding it too long, because I think there's a possibility to get some downside here. But those who took the profit on yesterday's trade, well done. I'm a bit nervous, Gerard. I'm wondering if it could actually, there's a bit of technical damage. It opened, you see the body on the candle? Remember, it opened on the green candle there, closes there. It's the other way around on the red or the bear candle. And it opened just on and below and followed down on the moving average. So there could be some negativity coming on that one. So I'm glad you stopped out, Gerard, assuming a profit. When I mean that, stop loss is not always a negative. You can be stopped out profit. Most times I'm stopped out, KGTP, but in a profit. But I would be nervous at buying at the moment. And I'm certainly not going to recommend a sell at the moment because there's not enough info. I want to see it confirmed. And we've got a long trade out, so it wouldn't sound very good. But a bit of technical damage done this morning on that one. CHFJPY. Be honest, CP, if I pronounce it properly, I wouldn't be selling the Swiss franc. Buy the pullbacks. Buy the pullbacks. Don't sell it. If we can come back to around about this level, maybe even come back down here, 161 area. We'll have a look at the situation at the time and discuss it and see what the overall picture is like to look for buying it. But I'll be very hesitant to sell the Swiss franc against the yen at the moment. Rather wait for a pullback to buy it. You're going against a very strong trend doing that. And I don't know the extent of pullback. I'm hoping for it, but I don't know the extent of it. It might not pull back as much as I'd like, and then I'm caught my trousers down by shorting it. And believe me, ladies, you do not want to see my trousers down. I'm glad you're getting off the subject, Ms. Trousers down, Martin. Let's quickly go to that. What do you think about the NAS on a 4-hour? Rescued by Martin. Okay, and the 4-hour purely. Oh, sorry, put on the 4-hour first. Yeah, I see what you mean. Do you see what he's coming from there? You see, when you get the hang of this, you can see it immediately. You should be getting that stage very soon. He's looking on the 4 hours a potential buy, and I completely agree. I totally agree. Upside, I see, bounced off there on support on the daily. Why am I nervous? Simply because the non-farms tomorrow, which again is over 24 hours away, and 14, yeah, and 4 hours away is the jobless claims. The jobless every week. It's taken on a bit more importance than normal, but that makes me a little bit nervous. That's later on this afternoon at 2:30. But take that out of the equation, I do expect to bump upwards, yeah. If you want to take the highly aggressive risk, you'll get a decent move in the next 4 hours because it's a very volatile instrument. You should get some movement. You might want to scalp for a quick profit and be out of it upwards too. Or better still, if you're in a nice profit, modify your stop to break and so you can't lose on the trade and sit in the jobless claims might come out in your favor for further movement upwards if you're going long. But I'm assuming that's what you mean. And if you do, I agree with you. Especially in this weather, you're right there, mate. Yeah, it's probably prudent, but say for a highly aggressive guy, you might want to take the risk on the technical and see if you get enough movement on it. Let's try 1 hour. Just getting a bit of bounce there, as you can see. 15 minutes, getting a bit of a bounce, but it's not getting much follow through. On the very short term, 10 times 15 moving average, it's back to breakthrough. I personally think the risks outweigh the returns on that one. Not necessarily. Alone, it's a bit overcooked. I give you. There could be some profit-taking pullback. Remember the DXY, like I posted earlier on, is a tradable instrument. Not on here, but on a lot of platforms. But yeah, there could be stuff coming out that could further increase it. If it's inflationary, the jobless claims is inflationary. In other words, there's less people claiming than expected, and then the non-farms tomorrow is way better than expected. That could be perceived inflationary, and it'll be a trigger, as expected, Jerome Powell. You know, he's the chairman of the Federal Reserve in the US, to maybe reconsider in September another interest rate hike, because it looks like he might be putting it off for the rest of the year, but he might push it to reconsider. That would strengthen the dollar, so be a little bit careful. But yeah, it's likely to be a pullback that part aside. Yeah, I think 103 should hold it. It'll be a technical fundamental push it above that.
That trend of the NAS is the same as Dow, so they follow suit.
Not exactly, but they should do, Fani, because remember, the Dow is the biggest 30 companies, and a lot of them are also in the NAS, like Apple, Amazon. Amazon's expecting some. That's a good point. Be careful, Amazon, expecting some results out. I think Apple as well. I think the Apple's expected slightly negative, a lack of sales on the iPhone, and Amazon expect to be quite good, but don't jump the gun on it. But anyway, going back to what I was saying, Google, Alphabet, Meta it is now, Alphabet, Google, Meta, Facebook as was, Amazon, whatever, Microsoft, these are all enormous trillion-dollar companies, and they're all part of the Dow as well. So, and sorry, the NAS and the Dow as well, and fact, S&P 500 as well. So yeah, often they're pretty similar. Occasionally get one getting in the opposite direction. We've seen it already in the trading room a couple of times, but not often. And also a little tip, the European indices often follow the Americans as well. I very rarely see the FTSE or the CAC or the IBEX, which is a Spanish one, whatever, German 30, the DAX, going shooting up with the NAS and Dow falling away back madly, But anyway, so rather stick to these two. But for the guys in the Disney, they'll want that to come off more, hey? But technically speaking, the NAS looks like a bit of upside, but be very careful. We're probably prudent to leave it alone for now. But hope you all see why. In fact, even as we speak, it's breakthrough at the moment. It's so volatile. But yeah, I'll leave that alone. Maybe start looking again next week. We've been a bit quiet lately on that one. So maybe we get some more hope next week. I think even Gerard might leave it alone. And he's our major, in fact, he's our general trading marine Rambo. Hey, Gerard? Okay, just to change the subject, new guys are coming today. Dante and Nat, do you feel you're learning something? Do you think you've have gained some value or anything else you'd like us to cover? And I say us, not just me, us to cover in here to help you along. Like Nikki learned quite a bit by interacting. There might be some you've got in your mind you'd like to ask. If I can answer, I'll definitely do that. Not Roberto, but Nancy Baggio is coming in. Okay. Anything you want to add on that? So you find you're learning a bit. It's very important. And don't forget, get your volumes right. Get the calculator out. If you don't have it, you must get it. Live support. Live chat, sorry, live support. Live chat technical support. Yeah. Good stuff, Sharon. I'm not even going to try to pronounce your name. You'll laugh at me. It sounds like it's probably got a click sound there. Yeah, yeah. What was that famous lady did the click song? God, I've got it on Spotify. That lady, yeah. I think she died recently. Yeah. Anyway, whatever. Miriam Makeba, thank you. Miriam Makeba. Got one of her albums on Spotify. Oh, suddenly forget the name. Forget my own bloody name. Okay. Right, just to recap, I hope your CAD JPYs, those guys still in it, are doing okay. No, sideways. NZD JPY, I hope for your sake it's going to do something. Let's give us a bit of jip. We'll see. So there's a good lesson to make sure you check it now and again and modify so you don't have a horse if it moves suddenly the wrong way. It will start to get clear after a while. You should get to the stage with a practice. You could look at, let's pick one out. I don't know what, we'll put this one out. NZD CAD. We'll look at that for a while. I can immediately look at that and say, right, on the date on the 4-hour. Let's go to the daily first of all. Go to the daily. I can immediately sell into the sell zones below all these guys, and I can see there's a bit of support there or resistance going short. I can see it's an indecision candle. Would I be selling or buying it now? Probably not, but I'm going to look at the weekly. Again, quite a strong resistance there. If you're going short, I wouldn't be buying it. I'm going against the trend. Look at the 4-hour, and more or less the same picture, and a lot of indecision candles with tiny bodies and wicks on either side. Not one side, either side. Indecision, buyers are defending, sellers are defending, leave it alone. that can go through my head pretty quickly and move on. Bit of practice, you'll be able to get the hang of that. So you can go for 30, 40 instruments a couple of times until you find one you like to look at, and then go into more detail. And that's why I'm not overcomplicating it. I promise you guys, I know for experience, everybody on the planet, the biggest problem to overcome is your head. No doubt about it. It's the emotional head. When you got real money on it, it plays havoc with the old brain there. That's why I don't look at it all the time, because it just plays with your head. You got your strategy, checking out again and modify stop loss, hits the stop loss, so be it, move on to the next one. Your volume's all right, you can take the knock. If you're traumatized by the knock, you're overexposed. That's why you get the calculator, so please do that. Okay, yeah, just the other thing, I think everyone's got my name, but if you don't, I'm going to put my name and number down now. Give me a second, guys. Trading support. Just want to clarify that for a couple of people in a moment when I get it out. And if you're overseas, it's +2761. Right, probably just to WhatsApp me on that number, but not in the demo accounts like I mentioned. Okay. Just want to mention as well, a lot of guys go to the live chat, ask about trading advice or around their account manager or whatever. Just to save you time and trouble, they'll have to pass to me anyway, because I'm licensed by law. If you're going to maintain your FSP, you've got to have be on the rep register of the FSCA as a license to advise. And if you're not allowed to give advice. So if you ask the others, they have to put it to me anyway. So probably just easy to save your time, go around the roundabouts, just WhatsApp direct. Okay. But please not on demos. I'm not interested. No broker is. That's to play around with, learn how to operate the platform. Live is the name of the game. And please remember, very, very important, you must keep free margin in your account. I've seen guys 7, 8 grand wondering why they can't get into a particular instrument. And I find they've only got about 30 around free margin. They've got probably all the money on the market. Not wise. You must keep free margin. A lot of people suggest no more than 50% on the market. Unfortunately, the abundance of tiny accounts means you can't trade with that on that basis. You've got to go over that anyway. But do not enter another trade if you're smaller margin, because you risk getting margin called. You must keep free margin. If you don't have free margin in your account, your largest position will be automatically closed. And therefore, you'll be upset because it hit your stop loss. Why did we do it? Because you didn't have enough free margin. Very important. And that's a continual problem with people with small accounts. They get a trade idea and they can't go in because they don't have enough money to do so. Which is understandable as long as people know why, but it's frustrating they don't know why, and that's the answer. You must keep free margin. I just thought add that to some people who are just starting off and now aware of it. Okay. You'll often have people pop up in the trade room and come, I like the trade, but I haven't got enough free margin. I'll stick with the trades I've got. That sort of thing. You get it now. Good stuff, Solly. And the margin call, fun enough, is a good thing, because a lot of guys don't trade with a stop loss. That's their choice. They could get into trouble. The margin call is like a stop loss. It just as bloody well. I'll give an example. When you put a deposit down a derivative, it's borrowed money. I want to make this absolutely clear when I've got a few moments to explain this. Your exposure on £1 million house you buy is £1 million. That's your house. Just because you put, let's say, 100 grand, make it a small deposit of 5%. 5% deposit is 50,000 rand. Now you got 100 grand in your account. 50,000 comes out your account, for argument's sake, your bank account for the £1 million house. But 50,000 is not your risk. It's the £1 million house, your exposure. Let's say something happens to your area and it suddenly comes down in value. Let's say it drops very quickly from £1 million by 10%. What's 10% of £1 million? 100 grand. Not only have you lost your 50 grand, you now owe 50 grand. So the margin call is actually a good thing in a way. It protects you from that. That was a lot of horror stories in 15, 20, or more than that, 30 years ago, in days of Nick Leeson. You know, he broke Barings Bank by over trading in an area where people don't understand derivatives. He knew a little bit, and he overexposed, no stop loss to the Nikkei. until Kobe disaster came off and it fell through. It was going long, and it completely not only lost all the money he had, but he ended up owing $1 billion because it went right through, and there's no buyers or sellers there as well, because just plummeted on that fundamental. So remember, expect $1 million, even though 50 grand came out of your account. Just remember, if that price suddenly drops by 10%, $1 million rands, 100 grand, you owe them. So the last thing you want to do is put 1,000 rand in and say, no, you lost your 1,000 rand, Mr. Smith, but you owe us 2 grand. No stop loss, and then because we didn't have margin calls. So your margin call away is like a sort of a compulsory stop loss. So it's rescued many your ass, even though they complained at the time. Hope you're understanding this. You need to understand the pros and cons of a fast car, which this is. Well, that's what happened to NVDA. Horrible that was. NVDA is a classic example. The market closed at 10:30. After market close, we were going short on it. Fabulous results came out. They made a fabulous profit. It opened the following day way above the stop loss. Okay, so all the guys, remember, stop loss is above entry. Remember, said, why did it stop me out? Why have I lost that amount of money? Because there was no buyers and sellers at the price where your stop loss. Stop loss is just a buy or sell order. Very important to understand that. It's a buy or sell order. I'm putting my house on the sale for R1 million. And okay, but if no one takes R1 million, I've still got the house. You get the idea. So I've got a stop loss now of, let's say, 950,000 rand on my house. Example, right? And then the market suddenly opens up at 900,000. That's the value of house. I'm sorry you put your stop at 950, but it opened up the following day at 900. If you want to get out of that, you're out. And that's what happened. Just remember, we call that slippage, by the way. It doesn't happen very often, like when the market's round the clock, like Forex, the liquidity is there, it's not a problem. What can cause a problem? A sudden fundamental. I'm going to take an extreme example. You're going short oil. Brent or WTI, you're going short, and you got at $70, your stop is at $72, and suddenly a war breaks out in the Persian Gulf, or a bomb dropped there. Persian Gulf enters the Straits of Hormuz is closed. What's going to happen? Oil, it's going to shoot through the roof. It's going to jump from $70 to $75. Example, your stop loss in 72 is irrelevant because no buyers will sell at that level. They're only coming in at 75, so you'll be out at 75. Now, don't panic on this. It's very rarely ever occurs on movements within the liquidity of the markets on opening as they go around the clock. But it can on a massive fundamental coming out or a bomb going off, or it closes like on a share, close up as 10 and opens the next day. Or Forex, it closes at midnight Friday, opens again first thing Monday morning. Something might happen over the weekend. Don't see a closing position. Just make you aware of it. Don't panic. I'm just trying to give you knowledge to overcome the fear by having the knowledge. NZD CAD, for instance, it closed at this price on Friday evening, and it could open for something could have happened to New Zealand dollar or Canadian over the weekend. It could open up, let's say, 82. You get the idea. And you're going short, your stop was 81.50. You can't get out 81.50. The market was closed. You're going to get at 82. Don't panic about it. I just want to make aware of it. Stop loss and TB is purely a buy and sell order when the markets are open. Hope we're all clear on that. I'm sure some people didn't actually fully understand that. We'll hope you do now. It's very important. If you don't, please ask. Well, margin is a deposit. Simple as that. If you want to know what the leverage is, you divide the margin into 100. So let's say it's all shares are 5%. 5 to 100 is 20. So leverage is 20 to 1. So $1 move in the share price is $20, 20 times the speed to you. On the leverage 500 to 1, it's 500 times the speed. So your deposit is, let's say, 2,000 rand on a $1 million house. That's a 5 to 1 leverage. The problem with that is it goes well in your favor. If it doesn't go well, that's why you must have a stop loss and work out your risk using the calculator before going in. And not having no stop loss and overexposing a highly leveraged account means if it goes against you, you're going to get margin called. The slippage means there's no buy. Simple as that, Nikki and guys. No buyers or sellers are where the stop loss is. You're going to go into this now and you put a stop. Let's show one of these. See what I mean? Probably more easier. It's very important. I'm sure not everyone understands it. Right. That's a stop loss. Right. Now, that stop loss. Okay. Here, better excuse. We'll use Discovery. That is closed right now. You see, the stop loss is 91.20. Now I'm going to use Nikki, for example. She's got a stop loss at 87. Right. Is that correct? Yeah. But let's say the market opens at 3:30 at 88. Your stop loss 87 is irrelevant. There's no buyers or sellers at that level. The stop loss is a buy order or a sell order, whether you're going long or short. The same for the TP. Now, if that market opens at 88, you're not going to be out at 87. You'll be out at 88 because no one's buying or selling at 87. Does that make sense now? Because I'm still
Oh,
thinking
yes, it
about-
does.
Okay, it's got to grasp it. I tell you what, I've got a TV set worth R1,000. In my head, it might be worth R1,000. What the market values at might be completely different. You know, you think your house is worth $1 million, but only when you close the deal between a willing buyer and seller will you get the actual value of that price of the house. It might be above or below it. But there's no buyers or sellers. You can value a house whatever you like. You're still stuck with it till you get the volumes of buyers and sellers. That's the beauty of the market. It's the secondary market. It puts buyers and sellers together. Anybody who's been in sales, this is dream stuff. The most difficult thing in all sales is finding customers to sell to. This does it for you. There's buyers and sellers right there, the click of a button. That's the beauty and why the market is there in the first place. Okay. Hope you're learning a little bit there, because these things are very important. So we all know how slippage works, what a stop loss is, and your margin is merely deposit. If you put a R100,000 deposit to buy a R1 million house, divide that into $1 million, it's 10%. So you've invested 10% of R100,000. So if your house goes up from $1 million to 1.1 million, it's increased by 10%, excluding costs, but you've made 100% profit because you did invest $1 million. You only invested 100,000, but your exposure is $1 million. So it's going 10 times the speed of the house price movement, and the 500 is 500 times the speed, which is incredibly profitable in your favor, incredibly damaging not in your favor. That's why you have a calculator, so you know the volumes to put in before you go in. So the leverage is irrelevant. With 1,100 to 1, you know you're risking 500 rand or you're prepared to risk, and guess you get stopped out. That's your protection, unless the market's closed or a bomb goes off, and then you have slippage. But that doesn't happen very often. No, slippage is not under a percentage. It's where the buyers and the sellers are. But when you want to sell me a product for 100,000, let's say make it 1,000 rand, you know, and you say you're not, that's not a very good example. You go into an order of a share, like I say, DIS, Disney. The value at the moment is what the buyers and sellers agreeing to the value. You know, more buyers move in, it moves up, and vice versa moves down. The price on close yesterday, +10, was $86.30. That stop loss, you have it modified to $87 for argument's sake, right? No percentage involved. If the market moves and opens above, there's only buyers that sell 88. There's no buyers that sell 87. There's not, your top stop loss is not going to get triggered, except at the opening price. You've got to get your head around this. In fact, what worries me is too many people buying and getting involved in this product don't know the pros and cons of leverage, even in leverage products. In fact, they don't even know the basics, and they're trading in something. It's like a youngster not really knowing about cars, jumping into the Ferrari and screaming off without knowing the rules of the road, the speed, or anything. And if they can't get lucky, but it often comes back and bites. These are basics of importance. Hope now you're getting some idea. Hope you all learned something there, guys. It's coming up to 11 o'clock. Any questions? Hope I haven't wasted your time waffling away. But anyone puts a trade idea, as I said before, we'll look at it immediately. I don't have one at the moment, but if you do, we do that number one. But I thought I'd just do a bit of refreshing there so we're all on the same page. And if you get all that, trust me, you know more than 90% of the people out there trading in the retail market. Pretty sure of it. And that's just not even complicated stuff. Is it? Yes, it is. What's the stopwatch come up? That rubs it in. I went chicken out on that one. God, I'd been about over 20 grand up and held on to the bloody thing. Stupid boy. 26 when we stop at 80. Thanks for reminding me. We're going to modify again. Call it 36. I'll make it 60. Modify to 1. Nicky, thank you for that. Modify again. I'll put it 1.116. It looks like it's heading down to the psychological air support resistance of the round figure. of 1.1100. Okay, it's looking like it's heading down there. You might get a bounce at 1.11, profit-taking bounce, but hope it's going to break through. Might even hit the TP. It's doing okay. No, it shouldn't be nervous. That's fear and fear itself. You know what I mean? Shouldn't be. It very, very rarely occurs radically. The major one we had was once, was the NVDA. The other one was all those years ago, 9/11, when the terrorists hit the World Trade Center. When your trades are open, it's fine. Round the clock during the week, it's not even a worry because they're all open round the clock and there's enough liquidity there. Okay, and you got more to worry about. A bomb goes off in your bloody union building or whatever. So I wouldn't over panic. Just being aware of it. If that fear, in my opinion, is a bit out of proportion. I wouldn't panic on that. I hold my position over weekends. I don't panic on it. Slippage occurred to me, I don't know, probably a couple of times in the last 4 or 5 years. And even then it was manageable. It's like saying I'm not going outside the house in case some meteor comes down and hits me on the head. There are probabilities unlikely. It looks like dollar Swissies, good old Swissies come to our rescue. It might come right. Talk about that. What about CAD JPY? Yeah, sorry about that. Looks like, yeah, thank God I stopped out. Hope some of the guys were. CHF JPY, keep an eye on it. Wanted to pull back to get in there. And unfortunately, said D, let's have a look at. Yeah, I thought so. Sorry, guys. Looks like I was right this morning. I didn't want to be right, but unfortunately looks like it. Yes, correct, Barney. That's correct. That's their costs. Like you go into a shop and you buy something, you're not getting a cost, clearly. You're getting a markup. That's how they make the profit. Yeah. Spread, it's the market maker spread, they call it. Yeah. Yeah, I think Chantel is going to hit the round figure. Seems to be on its way to the round figure, 1.11. Then it might get a bit of a bounce, and then hopefully it'll be a small one before it eventually goes further down. As you can see, my stop loss at 1061. Not sure I'll be tampering with it, but we'll have a look at the situation. Oh, hang on. Don't forget, guys, get your stop modified. Just remembered, 1 p.m. today, GBP interest rate decision. We just mostly all around. If some people want to do a straddle trade on the pound AUD or whatever they want to do it on, NZD or whatever, do not forget that. Make sure you've modified your stop if you're in the GBP CHF into a profit, not too close, to protect in case interest rate decision makes the pound strong. You know, it could jump on that or go the other way. Don't forget. Don't jump into it now. If you're not in now, leave it alone. Hope that's all clear. Okay, guys. Go for it.
Just wanted to also, you know, if you like, let's say you do a straddle at 1 p.m. or do you put in your buy and your sell stop at like just like 10 to 1, right?
10 pips away above and 10 pips below, not 10 to 1. 10 pips above the buy price, 10 pips below the low price, before half past, maybe 2-3 minutes, and make sure the order doesn't get filled. The buy or sell order must not be filled until the release. Once the release happened, you can see any movement. There's not much movement. Cancel both of them. You don't want to be stuck in a long trade and it suddenly changes its mind. If one's taken in, don't forget to cancel the one that's not filled. And then you can start putting your stop loss in afterwards. And work on around about 80 Rand per micro as your volume risk.
Okay. And then you said just put it in a few minutes before 1:30, right?
Well, give yourself time to put it in. I mean, put it in half an hour beforehand, as long as you keep an eye on it and neither gets filled. I mean, you can, like you see me do it. You see me do it. We had the CHF, because I'm that one. GBP CHF. Give me a second. Trade levels. There we are. You can move it back and forth. If you see it's getting filled, let's say it's coming down, getting filled just before 1:30, you can move it away. But that's as long as you understand that. But a lot of people are not getting this. So I say rather put in about 5 minutes to hoping not going to get filled because it's not getting the concept. But guys who get the concept and put it in and just move around. I might go in 10 pips, and just because I'm showing in the trading room, I might put it 25 pips away and move it closer later on. Why? To keep it a big gap, because I can concentrate and explain to the guys out there what the straddle trade is. And I haven't got to have half my mind watching the bloody thing, make sure I don't get filled before they release the data. But you can put in when you like, as long as you don't get either side of the filled before the release. That's the point I'm trying to make. Okay.
They got you.
Got it. Good stuff. Brilliant. Okay. Good stuff. And you all know how to close part position. If you don't, you can ask me next time you're in. Remember, it's an ongoing interact. We sometimes have quiet trading days. Might be a similar one tomorrow for the non-farms. Anything you don't understand, write it down, and we'll maybe revisit tomorrow. And I think even the older players, not older players in age, I mean experience, might pick up something they missed along the line. Okay, so that could be useful for everyone. This is not a training like the stock market college class. It's an overall practical concepts. We need to just to sort of hone your skills, as they say. Okay, brilliant. Good stuff, guys. Hope you all learned. Hope you're going to be not frightened off. Hope you're going to be a regular here. It's very important we get more people, because the boss, one of the reasons he came in on, I think it was Monday, was trying to find out, is the trading room worthwhile? I'm going to be honest, because not enough people are attending. Thousands of clients, we get 20, 30 people. Why is that? And if people don't attend, that's why we cancel the afternoon one. They won't have any more. It's your own benefit to attend, so we keep it going. So make sure you do attend. We need those numbers up to make it justifiable. Make sense? It's no good if people don't join. What's the point? It's like putting a show on, nobody's going to watch. So it's very important you make it worth your while by attending and getting other people to attend or whatever. I try to push it hard on the 100 people that so turn out of the data release and non-farms, etc. I'm surprised if you do. And then they complain about something of stuff they wouldn't have made that problem if they'd come to the trading room. It would have been already ironed out before they made the mistake. So it's up to people to support it if they want to, have it going. So just bear that in mind. Okay. Cheers, guys. And keep a pen and paper. Any questions, you can ask me tomorrow. Good stuff. Hope you learned. Great to have you, Dante, and anybody new there. Keep at it, guys. We'll get there. Thank you very much, Sharon.
Thank you all. Appreciate it. Thanks, Raj.
Thank you.